Rightio. Moving on with those moves in interest rates in New Zealand and here and worries about the future of China's economy. The Aussie dollar has weakened appreciably in recent days. Have a look at this. You can see it as we go to where 64.67 US cents. It's actually even picked up a little in the last little while. Stephen Dooley is the APEC currency strategist with foreign exchange business Convera and joins me now. Thank you for your time. I just wanted to go to one big issue about the Aussie dollar. It's being knocked about by the Chinese economy and where it might be going to. Interest rate settings here and around the world, but certainly in recent times it has weakened appreciably, and I just wonder whether that plays into the Reserve Bank strategy or not.
Yeah, look, I think they wouldn't mind the weaker Australian dollar from one perspective because it does help the export side of the economy. But historically, a weaker Australian dollar can tie into inflationary pressures. So as the Australian dollar falls, the goods we buy from overseas become more expensive. So it's a bit of a double-edged sword. There's a bit like Goldilocks and her porridge, the Australian dollar and the RBA. They're really looking for the Aussie dollar to be just right, not too hot and not too cold. Where we are at the moment, it's certainly around 65, I think is the level where the RBA would be comfortable with it. But as you start heading back towards the low 60s, I think that's when we might start to see a bit more of a concern from the RBA. But for now, I think they'll be comfortable.
Okay, so then you come to the whole issue of commodities and the trading that we have got with the rest of the world. It makes imports more expensive. We know that actually benefits Australian industry, Australian jobs. And then the exports, we actually get more income from that for our agriculture and our resources, even though resources are going down as a result of the weakness in China. So again, it's, this two-way flow, isn't it?
Yeah, well, I mean, the Australian economy has been resilient. We have been remarkably lucky. We are the lucky country, but we have been remarkably lucky that even as China has slowed down and even as we have seen, particularly the industrial metals like zinc and nickel have been under pressure, we've seen iron ore hold up relatively well, around $110 US per tonne. We've also seen, in particular, energy prices stay strong. The oil price is still above $80 per barrel. If you're at the Bowser, you know that. Natural gas prices have remained strong as well. That's partly because of the Russian invasion of Ukraine. So despite the fact that we have seen a big slowdown in global economic growth over the last 2 years, commodity prices have actually held up relatively well if you look at a broad brush of all of them. As I say, some of the specific industrial metals that you see used in manufacturing like zinc and nickel, they have been really pressured as the global manufacturing sector slows down. But other parts of the commodity space, wheat, energy, have held up better.
Okay, Stephen, just one thing, because obviously the Aussie dollar's under pressure against the US. You can see it against the pound a little and also against the euro. But other parts of the world, the Japanese yen being a notable example, have actually displayed weakness against the Australian dollar. Is there much two-way flow you're seeing out of these countries? Because quite clearly, many Australians will be a little averse to putting money into the States, Europe or the UK right now.
Yeah, absolutely. I mean, the Japanese share market has been in a renaissance over the last 12 months or so. Potentially there would be some interest, I think, in the Australian investment community looking towards Japan. And the reason why the Japanese share market's been doing well is they're keeping interest rates right at that pandemic lows. They haven't started lifting rates. So in Japan, it's been more positive. And the Aussie dollar's really just a couple of big figures off the 7-year highs around that 95, 96. Certainly, I think Japan is an interest for the investment community.
That is great. Stephen Dooley from Convera, good to chat to you today. Many thanks for your time.
Thanks for having me on.